So today we're going to talk about Chapter 3, Adjusting Journal Entries and the Adjusted Trial Balance. So these are the 5 types of adjusting entries we will be using. So we have types of prepaids. So over here on the right column are the adjusting entries. On the left are the original journal entries. On the left, these are not the adjusting entries. So if we had a prepaid expense, so we have prepaid rent and cash. The adjusting entry is when we actually use the rent. We'll adjust for the rent used. If we have unearned revenue, so if someone pays us cash and we haven't earned that cash yet, we're receiving cash in advance, that's the original entry. And then the adjusting entry that we'll make is when we've actually now earned that revenue. Depreciation, you can adjust for the depreciation of an asset. So these are the 3 types of adjusting entries for prepaids, and then we have 2 for accruals. So for the accruals, the adjusting entries are now here on the left side. So I can accrue for an expense or accrue for a revenue. So these 2 here would be the adjusting journal entries. And then later, when we have cash involved, these are not adjusting entries. So we have cash and cash, and then over here we also have cash, cash, cash. So when there's cash involved in a transaction, it is not an adjusting entry. Let's look at an example. So you'll want to make your journal entries for these business transactions. One of them will be an adjusting entry. Go ahead and pause the video. I want you to make the journal entries and the T accounts. Okay, go ahead and pause. Okay, and we're back. So you finished your journal entries. Let's look, see what we got. So these are our journal entries we should have made. And here in bold, this is my adjusting journal entry. It's a rent expense and prepaid rent. Rent expense and prepaid rent, so I'm adjusting for rent used. This is a adjusting entry. These are the 5 types of adjusting entries here in your chapter 3 of your book. So now we're going to make the T accounts, which you should have already made. So our T accounts will look something like this. And we're just getting the balances. That's what we're interested in here in the bold. And then I starred these. I made these red. These 2 T accounts are going to be for my adjusting entries. And then I'm going to show you a little example of what our adjusted trial balance will look like. So we previously learned in the previous video how to make a trial balance. So we'll list out our accounts, and then we're going to copy paste the numbers from our T accounts into our trial balance. This is just a little simple example. Now once we have our trial balance, then we're going to add in our adjusting entries. We don't mix them. We keep them separated. These are made at the end of the period. So I would then do $5,000 on the left for rent expense and $5,000 on the right for prepaid rent. So we should do maybe $5,000 on the right for prepaid rent, and my rent expense is $5,000 on the left. Oops. So these 2 will go under my adjusting column. So these were my adjusting entries, and so they'll go under our adjusting column. We're not going to combine them with our trial balance. And now we have what's called an adjusted trial balance, where we merge our trial balance entries with our adjusting entries, which will merge together. Let's just look at an example. This isn't the same as the example I gave you, but I just want to show you a sample. Again, with my trial balance, my total should equal here. These two numbers will equal, these two numbers will equal, and these two numbers should equal. So I have cash. So my adjusted entry now, I'm going to take my trial balance and my adjustments, and I'm merging them together. Same kind of method that we use to make our T account balance. So prepaid rent, I had 5,000 on the right, so I'm just going to copy 5,000 on the right. And now rent expense, we have 250 on the right and 5,000 on the left. So I want to take the difference, just as we did in our T accounts, and then the bigger side gets the difference. So the bigger side will be the left side. So I'll do 5,000 minus 250, so 4,750. And in theory, so if I finished, so my left side equals 5,000, and my right side also equals 5,000. So these two numbers would equal. So that's our trial balance, our adjustments, and our adjusted trial balance. So real quick, just recap what we've done in this video. We took we took the English and we translated in journal entries. We have the journal entries here now. One of the journal entries was an adjusting journal entry. So we're going to keep that separate. We want this rent expense to have its own T account, and this prepaid rent to have its own T account. We wouldn't want to mix it with a normal journal entry rent expense. We wouldn't want to put it on the same T account as that. Okay? It gets segregated, separated. And we make our T accounts, and then I highlighted the two that were adjusting entries, and then all we're going to do is copy paste the balances. All of these balances will go to my trial balance, and then these two balances I would copy to my adjusting column. So you would list out all of your accounts here and copy paste in the balance. And then we're going to go ahead and copy paste in my adjusting balances, and then we merge them together, the same kind of concept as our T account. So that's our chapter 3. Have a good day.